Hi, everyone, and welcome to the Real Estate Podcast. I'm Wendy Forsythe, Chief Operating Officer at HomeSmart International, and today I'm joined by Mike Simonsen, CEO of Altos Research. Mike, welcome to the podcast.
Happy to be here, Wendy.
Awesome. We're glad that you're here. So tell us a little bit about Altos Research and what you guys do.
We track the housing market. We have been doing so, tracking in real time the real estate market, everything for sale, the pricing, and all the supply and demand, and bubbling up all the analytics we've been doing it for the whole country for like 13 years now. And then we package up those analytics for agents and brokers and people who are interacting with their clients to reach your clients, communicate, answer the question, how's the market?
Cool. All right. So let's answer that question, or let's try to answer that question, because that is, such a topical question. There's a lot of noise around the real estate market right now and what's going to happen in 2019. And there seems to be all kinds of opinions that are doom and gloom and really positive and somewhere in between. So from your perspective, how's the market?
So we are in late January, which is always an interesting time of year because such strong seasonality. We get a January 1 reset with new properties coming on the market. So there's a lot of signal that we can find in the data right now, and we can extract where the first quarter is going to go and really where the first half of the year is going to go, which really means for the full year. So we have a lot of signal right now.
Okay, so you're going to show us some charts.
I brought you some data. And
all right, who would have thought the data guy would bring charts?
That's right.
All right.
First thing to know, so this is a national proxy. It's the Altos proxy. It uses the same 20 cities as Case-Shiller composite, so the big markets. Inventory is up for the first time in like 7 years. It's been falling since the recovery started January of 2011. And so we are up fractionally this year. It's been so low for so long. It's still very low, but a little bit of breathing room. So that is, I think, for most people in the market, that's actually a bullish sign. There's more inventory, more ability to, more selection.
Okay. So for our agents listening in, then it is really time to double down on your prospecting and get those listings.
Yeah, and you might even find, because we had, as interest rates climbed last summer, you could really see price sensitivity to rising interest rates. So we could see things like price reductions increasing, so and time on market increasing. We could see things like relists happening. So because of that, you may have some opportunity for people who withdrew last fall and now are still thinking of selling. Interest rates have been actually down the last few weeks, so they may be it may be a good time to revisit those.
And we're seeing that. I just spoke to a group of agents this week, and we were talking about working expired listings. So exactly what you were saying. It might have been on the market last year, didn't sell. They're ready to relist and bring it back on the market. And it's been a lot of years since we've been talking about expireds in the business.
Yes, exactly. So nationally, we can see a few things like that. We know that in the fall of last year, so the interest rates climbed in the second half of the year. Home prices and demand was pretty sensitive to that. If we look at right now, January 1 is really the trough in pricing. You get the seasonal. So now you'll start the stuff for the first quarter starts to come on, and agents know exactly where the demand is. In aggregate, they price the properties. If the demand's coming, we can see that very quickly in the data. Okay. We are pricing nationally is fractionally lower than it was January of a year ago.
So it's fractionally like a percent or two?
Yeah, like a 1% lower. But that's significant because for the first time in 7 years, it's actually flat, basically.
So do you see that continuing throughout the year?
It's if interest rates were to resume a climb, I think we would definitely be in for a flat at best year. I don't have any ability to predict interest rates, so if they happen to fall or stay low, then we could actually resume a climb and have a strong year. We're starting at a flat year.
Okay.
So that's where the signal is right now. I'm looking at the prices across the 20 cities. This line right here is January 1 of 2017, here's January 1 of 2018. The red line is our weekly measure, and it bounces around. Now we're down at January 1 of 2019, and it's just a tad below where it was last year, January 1. So that's sort of a broad national proxy. You know, local markets vary a little bit.
All right.
The other thing that's interesting is, and this is a reflection again of the interest rates last fall, of the cooling of the market that we noticed last fall. This is a measure of price reductions. So percentage of homes on the market that have taken a price cut. In a normal market around the country, about 35% take a price cut before they sell.
Okay, 35%.
35%.
Really?
So
okay.
sometimes that's strategic.
Right. Sometimes
it's accidental. You know, sometimes it's a client. Whatever. You know, they get overpriced. They take a cut. About 35%. When the market cools, that number 40%, 45%, maybe half the stock is taking a price cut. That's because demand is a lot weaker than we expected.
Okay.
When that's below 30, demand is higher than we expected. And we can see this, the range, the normal range. So normal at this time of year, you know, the price cuts in the fall is around 40. Normal, this has been good markets the past few years, under 30. So you can see that here's your 35%. Last fall, as demand cooled, we had price decreases. More homes had to cut their price. So that also is a signal for how we're pricing this spring. When we're talking with new listings and sellers, the opportunity is to say we're going to keep an eye on the market. The market may give us a signal. We definitely cooled last fall, but now we're going to keep an eye on the spring as the spring's resetting. And the price reductions are a number that I like to show people how to keep an eye on.
I think that's a fascinating number. And you know, I was talking with an agent this week that was just sharing that he's finding in his listing presentations now, he's spending a lot more time talking about price. That in the last few years, it's been, okay, well, you want to sell in 30, 40 days, it's about this price, and off they went. And you know, it's a different market now, and we have to know those numbers going into those listing appointments.
That's right. That's exactly right.
Okay, great information.
So we can look at a bunch of other things. We could spend more time with the data. There's a lot of stuff to look at. We could do a bunch of local things.
Okay. Tell us what, from your perspective, looking at all the data, do you see any sort of big potential surprises that could happen in the market? Like we often hear people talking about like there's going to be, you know, another downturn. Like, do you think there's a chance that that's going to happen?
There's nothing in the data right now that shows the bottom falling out.
Okay.
There's nothing in the data that shows demand crashing or prices crashing. There is, you know, we could all feel it a little bit last summer. For the first time in years, things backed off a little bit. And so we're in a balanced market. Like if I were to pull up a report on Scottsdale, for example, right now, we use a number we call the Market Action Index. It's demand versus supply. If that thing is climbing, that's because demand is climbing or supply is tight. And at our Market Action Index at a 30 is a balanced market. And so I'm sure for like the local Phoenix market, we were looking at Atlanta. I was looking at Atlanta with a friend the other day, a client, and North Atlanta, and it's all very balanced market. It's like, you know, things are in a solid state. There isn't, there are no signals of a big scare.
Great. Okay, we like that. That's the whole message of the podcast right there. That is good news. That's great to hear.
And more inventory, so you know maybe we get actually some more production this year.
Right. Great. Okay, that all sounds good. So leave us with a couple takeaways for our agents. What data points should give us a couple data points an agent should be watching closely in their businesses?
Well, I like to use our Market Action Index, so we can at a glance say how's the market. And when
the number one question that agents are asked.
That's right. Oh, you're a realtor. How's the market? And to be able to answer that question with an actual number, like, well, you know, inventory's up a little bit from last year. Prices are flat, but interest rates are good. So the demand looks strong for the spring. Like that's a real answer to that question. Our gut or our training tells us to be a cheerleader. So when somebody says, "How's the market?" we want to say, "It's great." and without actually any data. So I like to teach people to use the data.
Teach people to use the data. That's great. So if our viewers would like to find out more about what you do at Altos Research, how would they do that?
They can go to altos.re and see the latest stuff. They can actually pull up an Altos report and look at their local data. They can get a demo and see how we package up that data for agents to automatically send it out to their clients and use it in their listing presentations, use the data in their business.
Awesome. All right. Well, Mike, thanks for joining us here at the Real Estate Podcast. And folks, you heard it here. The market's not going to crash. It's going to be positive, and let's go have a great year.